Okay, let's unpack this. Imagine you're trying to predict something really complex, like financial markets.
Yeah, notoriously tricky.
Right. But instead of just getting one number, one future price guess,
Mm-hmm.
imagine getting a whole map, like showing all the possible ways prices could go and, crucially, how likely each path is.
That's a completely different ballgame, and it's kind of where cutting-edge AI is bumping into decentralized finance these days.
And it's a crucial difference, isn't it? Like those single-point forecasts, they're okay for simple stuff, maybe.
Sure, maybe for a casual bet. But if you're talking serious finance managing risk, complex trading strategies, or even training really smart AI agents, you absolutely need that full picture, that probabilistic view.
Because markets aren't just one straight line.
Definitely not. They're messy, uncertain. Probabilistic is the word. And, the big banks, the huge institutions, they've spent fortunes building proprietary systems to generate exactly this kind of rich data, and they keep it very close to their chests.
Right, it's their edge. And
Yep.
that's where this idea of like democratizing it comes in, making that sophisticated data more accessible.
Precisely. Which brings us to our deep dive today. Bittensor Subnet 50. It's known as Synth.
Okay, Synth SN90, got it. And our source material for this is a pretty detailed investment analysis focused just on this subnet.
Yeah, it really digs in.
So our mission here together is to kind of sift through that analysis, pull out the most important bits, maybe find some surprises, and help you get your head around what's actually going on at this intersection of AI and crypto.
Sounds good. So the core problem Synth is trying to solve, according to the analysis, is just how inadequate those simple single-number predictions are for sophisticated use cases.
Like managing big portfolios or pricing options and derivatives.
Exactly. For those, you need data that actually mirrors how real markets behave. Things like volatility clustering.
Where big price swings tend to clump together.
Yeah, exactly. And also what analysts call fat-tailed distributions. Basically, it means extreme rare events happen more often than the simple models predict. You need data that captures that possibility.
So they want the data to be, like, realistically messy, not just some smooth curve.
That's the idea.
Yeah.
And Synth's big goal, using the Bittensor Network, is to create what they're calling the world's most powerful and accurate synthetic data for forecasting by really nailing that probabilistic messiness.
Ambitious goal. So their value proposition is what? To be a data source.
Essentially, yeah, a foundational resource. The plan is to feed this unique data to AI agents, especially in the decentralized finance space, EVFWI, and also to support things like options trading or advanced portfolio management tools.
Right, so they're like the picks and shovels provider in this DVI gold rush.
That's a good way to put it. They're not necessarily building the end product AI trader, but they want to provide the specialized data that makes those tools smarter.
And it's synthetic data. What does that mean exactly? Not just live prices.
Right. It's more than just a live forecast. It's about generating comprehensive data sets. These can be used for training AI models, backtesting strategies, even simulating market conditions that might only happen very rarely in the real world, which is super valuable for testing resilience.
Okay, interesting. So how does it actually work on Bittensor? The analysis mentions miners and validators, which is pretty standard for Bittensor subnets.
Correct. The miners are the ones doing the generating work. But here's the key difference. They don't just output one price target.
They create those multiple paths we talked about.
Exactly. The analysis gives an example like, say, generating 100 different possible price paths for Bitcoin or Ethereum futures over the next 24 hours, maybe in 5-minute increments. And these simulated paths are meant to mimic those real market dynamics, the volatility clustering and fat tails.
And where do they start from?
They use the Pyth Oracle network to get the current real-world price as their starting point for the simulations.
Okay, so miners make the paths, then the validators step in.
Yep. And their job is crucial. They score the miners' predictions, but only after that 24-hour prediction window has closed.
After the fact.
Yeah.
How do they score it?
Yeah.
Compare it to the real price.
They compare the entire distribution of paths that a miner generated against the single actual path the market took over that period. And they also use the Pyth Oracle to get that ground truth, real-world price data.
Okay, and this is where it gets technically quite different, right?
Yeah.
The analysis really highlights their scoring method, something called CRPS.
Yes, the Continuous Ranked Probability Score, CRPS. It's pretty central to Synth's whole mechanism.
What makes it special?
Well, it's specifically designed for evaluating probabilistic forecasts that give you a range of possibilities, not just one number, especially for continuous things like price.
Okay.
So CRPS doesn't just look at your single best guess. It measures the entire forecast distribution against the actual outcome. It looks at two things at once. Calibration.
Calibration, like, do the predicted probabilities actually match how often things happen? If you said 30% chance, did it happen about 30% of the time?
Exactly that. And it also measures sharpness, which is basically how concentrated or confident the forecast is. You want your probability distribution to be narrow around the actual outcome, if possible.
So you want to be accurate and confident, but not overconfident.
Precisely. And lower CRPS scores are better. The analysis stresses this metric is vital because it incentivizes miners to get both the prediction right and accurately represent the uncertainty around that prediction. It rewards honesty about the probabilities.
That sounds much more sophisticated than just how close was your price target.
Yeah.
So they calculate the CRPS for every miner. How does that turn into TAO rewards?
It's a multi-step process detailed in the analysis. First, validators rank the miners based on their summed CRPS over the evaluation period.
Okay, ranking.
Then they actually cap the worst scores. The analysis mentions they take the bottom 10% of miners and give them the same score as the miner at the 90th percentile. This stops really bad forecasts from messing up the average too much.
Oh, okay. Prevents outliers from having too much impact.
Right. Then the scores are normalized, basically adjusted relative to the best performing miner. And importantly, they don't just reward based on one period. They use a time-weighted average score that decays exponentially.
Meaning recent performance matters more.
Exactly. The analysis mentions specifics like a 4-day look-back window, but with a 2-day half-life. So performance from 2 days ago counts half as much towards your current score as today's performance. It rewards consistency.
Okay, so you need to be consistently good, not just lucky once. Makes sense. And then the actual TAO emissions.
They're distributed using a softmax function applied to those final leaderboard scores. Softmax is pretty common in machine learning. It basically converts those scores into a probability distribution.
So the rewards get split up proportionally based on who's doing best relatively, according to that time-weighted CRPS score.
You got it. It's definitely technically complex, as the analysis acknowledges. Miners need sophisticated models to generate good probabilistic forecasts, and validators need to calculate that CRPS accurately.
That complexity could be a barrier to entry, right? Maybe keeps less serious players out.
Potentially, yes. But it's also kind of the key to producing this potentially unique and valuable data. Quality requires effort.
Okay, now, let's pivot to something the analysis spends significant time on and honestly flags as a major concern: security.
Yeah, this is a big one. Always critical in crypto, but especially when you're dealing with financial data and incentives tied to potentially valuable tokens like TAO.
So what's the issue here?
The analysis explicitly points out the absence of a clear, identifiable, independent security audit that is specifically for the Synth Subnet 50 code and mechanism.
No specific audit for SN50. That sounds not great.
It's definitely a red flag. The report mentions that trying to access the security information directly on the relevant GitHub repository resulted in an error message, like, uh-oh, there was an error.
Okay, that's
Yeah.
not reassuring.
And searching for audits specifically for Bittensor Subnet 50 or Synth SN50 apparently didn't turn up anything relevant. They found audits for things with similar names like synthetics or a synth token on the base chain, but those are completely unrelated projects.
Easy to get confused, but yeah, totally different things. What about Mode Network, the team behind Synth? Do they have general security practices?
The analysis mentions Mode.com, talks about general security, measures things like multi-factor authentication, data encryption, penetration testing on their platform. But the key point the analysis makes is that it's unclear how those general practices apply to the specific risks inherent in the Synth Subnet's unique smart contract logic and its incentive mechanism.
So the general stuff is nice, but doesn't guarantee the subnet code itself is safe from exploits or flaws.
Exactly. That lack of a specific public audit report from a reputable security firm focusing on the subnet itself is highlighted as a significant risk factor. It leaves the door open for potential vulnerabilities. It's something the analysis really emphasizes needs public clarification.
That's a critical point for anyone looking at this space. And it ties into dependencies too, right? The reliance on the Pyth oracle.
Definitely. The analysis notes that both miners needing the starting price and validators needing the actual price data rely heavily on Pyth. It's a well-regarded oracle, but any external dependency is still a potential point of failure or manipulation risk, however small.
Okay, so stepping back a bit, where does synth fit in the bigger picture? The AI market is huge, deep AI is growing.
Right. The analysis positions synth at that intersection. The AI market was already massive in 2022, over $136 billion according to the report, with huge projected growth. Deep AI is newer but has a lot of buzz.
The report uses that Porter's five forces model to look at the competition. How does synth stack up there?
It paints a picture of a pretty tough environment. First, threat of new entrants, judged as high. Especially within Bittensor itself, where launching new subnets is, the whole point. Though the technical skill needed for this specific type of subnet might be a bit of a barrier.
Okay, high threat of new competition. What about suppliers? Like data providers or talent?
Bargaining power of suppliers, moderate to high. Things like compute power might be somewhat interchangeable, but critical inputs like reliable Oracle data like PIFT have significant power. And finding top-tier AML talent capable of building winning miner models. That's a limited pool, giving them leverage.
Makes sense. And the buyers? The users or the TAO stakers?
Bargaining power of buyers, high. Potential users have tons of alternatives for financial data or forecasts. And critically, the TAO stakers, who are effectively the economic buyers deciding where to allocate capital, have immense power. They can instantly move their delegated TAO, DTAO stake to another subnet if they think synth isn't delivering or if something else looks more promising.
That DTAO mobility is a huge factor in Bittensor. What about substitutes? Other ways to get similar results?
Threat of substitute products, also high. There are established centralized data providers like Kaiko or Amber Data offering vast amounts of historical crypto data. There are countless AI forecasting tools out there. Big institutions have their own powerful private systems, and of course, other Bittensor subnets could emerge offering related services.
So lots of alternatives. And the overall rivalry.
Intensity of rivalry, high. The market for financial data and AI tools is crowded in general. And within Bittensor, the competition for that limited pool of DTAO stake and the TAO emissions that come with it is incredibly fierce. Synth has to constantly prove its value not just against external competitors, but against every other subnet on the network.
Wow. Okay. So a challenging landscape. Does the analysis mention any direct competitors doing exactly the same thing on Bittensor right now?
Not explicitly, no. The niche of probabilistic synthetic financial data validated with CRPS seems relatively unique within Bittensor at the moment the analysis was written. But the key phrase there is at the moment. Bittensor moves fast.
And outside Bittensor, you mentioned Kaiko, Amber Data.
Right. They're big, established players. Kaiko is known for broad crypto market data, strong compliance focus. Amber Data is strong in DeFi data. But they're centralized, and their focus might be more on historical data than the specific kind of forward-looking probabilistic synthetic data synth is aiming for.
And the big bank's internal systems.
Probably very high quality, but totally private, not accessible.
So Synth's strategy based on the analysis is what? Find a niche.
Pretty much. It's not trying to beat Kaiko at its own game of providing massive historical data sets. It's aiming for differentiation. Being decentralized, focusing on this probabilistic synthetic angle, and targeting the emerging DeFi market.
The big challenge, though, is proving it works.
Right.
Proving their data actually leads to better results for traders or AI agents compared to what's already out there.
That's the crux of it. They need to demonstrate tangible value from their unique approach.
So what exactly is Synth's unique value proposition as defined in the analysis? What's their elevator pitch?
The report boils it down to something like, provides decentralized, continuously validated, and probabilistically rich synthetic price data, enabling more sophisticated AI-driven financial models.
Okay. And does the analysis think this is actually a sustainable advantage? It uses that VRIO framework, value, rarity, imitability, organization. How does Synth score?
Let's break it down. First, the core tech. The probabilistic forecasting with CRPS validation. Is it valuable? Analysis says yes, it addresses a real need. Rare, yes, especially implemented this way on a decentralized network. Costly to imitate. Medium. The concepts exist, but building it effectively on Bittensor, attracting skilled miners and validators, that's tough. Organized to capture value, that's still developing, depends heavily on mode network and how the DTAO system functions.
So the verdict on the core tech is potential for sustainable competitive advantage, but needs work and ongoing innovation.
That seems to be the takeaway. Next, the integration with the mode network ecosystem. Valuable. Yes, gives a built-in potential user base and distribution channel. Rare. Yes, the specific setup is unique to them. Costly to imitate. Medium to high. Building a whole successful Layer 2 ecosystem like Mode aims to be is very difficult. Organized, again, developing depends entirely on Mode's success.
So another potential sustainable competitive advantage, but with a big asterisk, it hinges on Mode Network actually succeeding.
Exactly. Very contingent. Third, just being decentralized on Bittensor. Valuable. Yes, transparency, resilience, potentially rare. Yes, for this specific financial data niche, costly to imitate. Medium. Replicating the mechanism and building the community takes effort. Organized. Yes, the Bittensor DTAO system is designed for this.
So that aspect is seen as a sustainable competitive advantage, but obviously tied to Bittensor's overall health and governance.
Right. And finally, the potential first-mover advantage. Being potentially the first to offer this specific type of data on Bittensor. Valuable. Yes, if they capitalize on it quickly. Rare. Seems so currently. Imitable. Well, others can follow the model, so the first status itself isn't durable. Organized. Depends on how fast they move.
Analysis calls that a temporary competitive advantage. Gives them a head start, but they need to build on it with the other stuff.
Correct. So the analysis suggests the most defensible advantage likely comes from the synergy, the combination of their novel tech, the CRPS data, and that planned deep integration with the Mode Network ecosystem, which could create demand.
But then this seems like a recurring theme. Capturing that value isn't entirely in their hands.
No. The analysis is clear. It depends heavily on external factors. The dynamics of Bittensor's DTAO allocation, how stake moves around, and Mode Network's ability to actually build its platform, attract users, and foster that ecosystem are critical dependencies.
Okay, let's dig into the business model itself. How does value actually flow here, according to the analysis? It sounds deeply tied to Bittensor and Mode.
It absolutely is. Key partners mentioned our Mode Network, obviously, the Pith Oracle for data, Bittensor itself. And then there are early ecosystem partners cited, like SpiceNet, who apparently plans to use synth data, and Layer 3, a Mode partner. Plus, implicitly, the AI agent developers and the TAO stakers are key stakeholders.
And the core activities are the miners generating data, validators scoring it, Mode driving development and adoption. Resources are the tech, the network participants, the data itself, the brand they're building.
And the value propositions vary. For miners and validators, it's simple. Earn TAO emissions for doing the work. For the end users, the AI agents, traders, DeFi protocols, it's access to this unique data they supposedly can't get elsewhere easily.
And for TAO stakers?
They stake their TAO into Synth Pool, get back a specific DTAO token, let's call it DSY conceptually, and earn a proportional share of the TAO emissions allocated to the Synth subnet based on its ranking.
Who are the main customers they're aiming for?
The analysis identifies them primarily as AI financial agent developers, especially those building on Mode's platform. Also, quant traders, potentially DeFi protocols needing better risk data, and maybe academic researchers.
And how do they reach them? Channels.
The main intended channel seems to be Mode Network's planned AI agent app store. Also, direct integrations with protocols or platforms, and perhaps visibility through general Bittensor platforms.
Okay, now the crucial part. Revenue streams. How does Synth actually make money or accrue value?
This is a really key point from the analysis. Right now, the only mechanism described for value accrual and financial sustainability is TAO emissions.
So no one is paying directly for the data feed yet.
Not according to the current model described in the analysis. The value flows entirely from the Bittensor Network's inflation, distributed based on how much DTAO stake Synth attracts compared to other subnets. That distribution is split, 41% to miners, 41% to validators, and 18% goes to Mode Network as the subnet owner.
And the value is supposed to build up in that specific DSYNth token that stakers hold.
That's the idea, yeah. The analysis notes that any future potential for, say, charging direct subscription fees for the data is purely speculative at this point.
So bottom line for now. Synth's financial lifeblood is entirely dependent on competing effectively for TAO emissions by attracting DTAO stake.
Exactly. Long-term sustainability might need them to either consistently outperform other subnets to keep those emissions high, or develop direct monetization strategies. It's a major dependency.
Are they trying to build network effects to help with this?
Yes, the analysis mentions both direct and indirect network effects they're likely hoping for. Direct. More skilled miners join data, gets better, attracts more users, and maybe more DTAO stake makes it even more attractive for good miners. Classic flywheel.
And indirect. Through Mode.
Right. Indirect. If Mode's overall ecosystem succeeds and attracts lots of AI agents, the demand for Synth's unique data potentially goes up, makes Synth more valuable, attracts more DTAO stake.
So Mode's success is really intertwined with Synth's potential.
Hugely intertwined, according to the analysis. Mode needs successful components like Synth to draw users, and Synth needs Mode's ecosystem to create demand for its data beyond just the internal Bittensor incentive game.
Okay. What about the future? Does the analysis give us a roadmap for Synth?
The current focus seems clearly on probabilistic forecasts for just Bitcoin and Ethereum.
And future plans?
They're ambitious. The stated goals include expanding to cover multiple assets, not just BTC and ETH, and significantly, modeling the correlations between different assets.
Correlations. That's huge for portfolio stuff, right? Like how assets move together or opposite each other?
Absolutely critical for sophisticated finance, portfolio optimization, risk management diversification. But it's also technically much harder than modeling single assets. The complexity goes way up.
So a major potential value unlock if they can do it, but a big technical challenge.
Precisely. Their stated ambition is nothing less than being a world-leading source and the go-to resource for this kind of data.
Does the analysis comment on the feasibility?
It flags it as highly ambitious, especially the multi-asset correlation modeling. Success depends on overcoming those technical hurdles, continued funding support from Mode, attracting the right talent, and fending off competition.
Did the source material include like a detailed roadmap with milestones and dates?
The analysis notes the lack of a specific, detailed, publicly available phased roadmap. That absence can sometimes increase the perception of execution risk, as it's harder to track progress against stated goals.
Okay, but the analysis does identify potential catalysts, right? Things that could really move the needle for Synth.
Yes. A big one would be successful integration and clear demonstration of value within Mode's AI agent app store. That would be concrete proof of utility.
What else?
High-profile partnerships with external projects or institutions actually using the data. Successfully launching multi-asset support, and especially that complex correlation modeling, would be major technical milestones. Seeing a significant sustained increase in their DTO stake and rank within Bittensor would show market confidence.
And, let me guess, the audit.
Absolutely. The analysis strongly implies that the publication of a comprehensive, positive, independent security audit would be perhaps the most critical near-term catalyst. It would directly address that major red flag we keep coming back to.
Right. Plus things like measurable user growth and just general positive momentum for Mode and Bittensor overall.
Exactly. All those could positively impact Synth's trajectory.
Okay, let's talk sentiment. What's the general vibe around Synth, according to the analysis? Is the community excited, skeptical?
The analysis suggests it's kind of cautiously optimistic. There's definitely excitement driven by the whole DeFi narrative, the potential of AI agents, Mode Network's vision, and just the general buzz around Bittensor itself.
Note.
But that optimism is tempered. It's still very early days. There isn't much hard data available yet on actual widespread adoption or quantifiable proof that Synth's data leads to superior results in the real world.
So it's running mostly on narrative and potential right now.
Seems that way. The key narratives mentioned are things like democratizing access to sophisticated data, powering the next wave of DeFi agents, and the claim of superior data quality thanks to CRPS validation.
And the perceived strengths and weaknesses mirror that.
Pretty much. Strengths, the innovative tech, the Bittensor connection, the role in the DeFi story. Weaknesses, still early stage, lack of hard adoption metrics, and it bears repeating that critical lack of a specific security audit.
How's the community engagement? Are miners and validators actively involved beyond just chasing emissions? Are people talking about using the data?
The analysis notes that Mode Network is actively trying to build a community, mentioning initiatives like Mode Cooperators. However, specific engagement metrics for the Synth subnet itself, like the activity levels or qualitative feedback from miners, validators, or actual data users, seem less clear from the sources reviewed.
And the technical skill of those participants is pretty key for the data quality, right?
Crucial. You need skilled miners to generate meaningful, probabilistic forecasts. So sentiment seems heavily driven by future potential right now.
Positive catalysts like a good audit, real adoption proof, or big partnerships could boost it. But delays, issues, or continued lack of an audit could easily create FUD, fear, uncertainty, doubt.
Definitely. Which leads naturally into the comprehensive risk assessment laid out in the analysis.
Okay, let's hear the risks. Technical first.
And top of the list, highlighted repeatedly, the huge risk of smart contract vulnerabilities specific to SN50 because there's no public independent audit confirming the code's security. The analysis treats this as a major unresolved red flag.
Beyond the audit gap.
Other technical risks include potential flaws in the mechanism design. Could someone game the CRPS system despite its sophistication? Goodhart's law, basically. The dependency on the Python we mentioned, potential scalability bottlenecks if it grows very large, and just the risk of technological obsolescence in such a fast-moving field.
Okay, economic and financial risks.
These are substantial too. TAO price itself is volatile, which affects the value of rewards and incentives. A major risk is simply failing to attract and keep enough DTAO stake. The competition within Bittensor is fierce.
And the revenue stream issue.
Yes, the current lack of direct revenue streams makes them entirely reliant on those TAO emissions, which depend on attracting stake. There's also minor validator profitability risk. If it costs too much to run the nodes relative to rewards, participation could drop. And underlying all this is Mode Network's own funding and execution risk. Can they deliver on their ambitious plans with their current resources?
Governance risks. Is it truly decentralized?
The DTAO system provides economic decentralization as stakers vote with their capital. However, the analysis points out that Mode Network, as the subnet creator, likely holds significant initial control over SN50's parameters and direction. Changes to Bittensor's overall governance could also impact subnets unexpectedly.
Adoption risks seem obvious.
Yeah, simply failing to attract users or get integrated into other applications. If the Mode ecosystem doesn't take off as hoped, that hurts Synth's primary intended market. And again, intense competition from both inside and outside Bittensor.
Plus general market risks, like a crypto bear market killing enthusiasm, and regulatory risks.
Absolutely. Regulatory uncertainty hangs over both AI and crypto. The analysis notes potential issues around using this kind of data and also points out that established competitors often meet specific financial data compliance standards, like SOC2 or BMR, that a new decentralized subnet might not, which could be a barrier for some institutional users.
So, summing up the risk-reward picture qualitatively.
The analysis categorizes it clearly. Very high risk, potentially very high reward.
What are the scenarios?
Worst case, technical failure, lack of adoption, lost state competition could lead to near total loss for stakeholders. Base case, finds a niche, provides useful data for some specific users, achieves moderate success, and returns within the Bittensor ecosystem. Best case, becomes critical infrastructure for DeFi, correlation modeling is successful, deeply integrated with a thriving Mode ecosystem, captures significant value, potentially very high returns.
It definitely sounds like territory for caution, like early-stage VC investing, as the analysis frames it.
Exactly. Within a highly experimental and rapidly evolving ecosystem, the whole DTAO dynamic, the analysis strongly implies you should only consider involvement with capital you are fully prepared to lose.
Okay, so after digging through all of that, what's the final conclusion, the overall recommendation from this deep dive analysis?
Synthesizing it all. Synth has genuinely innovative tech addressing a real need. There's clear synergistic potential with Mode Network. It offers leveraged exposure to Bittensor. Those are the positives.
BUT.
It's very early stage. Adoption is totally unproven. Competition is incredibly intense, both inside and outside Bittensor. And the massive flashing red light, it currently lacks that specific public security audit for the SN50 code and mechanism.
So upsides, DeFi exposure, unique data, mode synergy, Bittensor leverage. Downsides, red flags. Early stage, unproven, no specific audit, major red flag. High dependency on TAO, fierce competition, mode execution risk, complexity.
Given that balance, the recommendation provided in the analysis is basically twofold. For existing participants, speculative hold monitor. Keep a very close eye on developments. For potential new investors, high-risk consideration, and only if you are highly risk-tolerant and already deeply knowledgeable about Bittensor, DTAO mechanics, and the DeFi space.
The reasoning being, the potential is there, it's compelling, but that audit gap and the early-stage dependencies are just too significant to ignore right now. It requires extreme caution.
Precisely. A cautious stance is warranted for now.
And the analysis lists things that could change that assessment, right?
Yeah.
Conditions for a more positive outlook?
Yes, and topping that list, unsurprisingly, is the publication of a comprehensive, positive, independent security audit for Subnet 50. That's seen as the most critical near-term step needed.
What else could improve the outlook?
Achieving and sustaining a top rank in DTAO stake, showing clear evidence of external adoption, people actually using the data, not just farming emissions, seeing the Mode ecosystem gain real traction, and successfully launching multi-asset support, especially the correlation modeling. Any of those would be strong, positive signals.
So investing in Synth via its DTAO isn't presented as a straightforward bet on a finished product. It's more like participating in an ongoing experiment.
Exactly. An early-stage venture in a rapidly evolving experimental system requires extreme diligence, constant monitoring, and strictly risk capital.
So there we have it. Synth Subnet 50 on Bittensor, a fascinating attempt to build really a foundational piece for AI and finance, trying to move past simple predictions and capture the messy, probabilistic truth of markets.
It's a really interesting approach.
And it leaves you with a pretty provocative thought, I think. In this world where we're drowning in data, maybe the most valuable thing isn't just more data, but data with demonstrable quality and transparency, data that's validated through decentralized incentives, measured by sophisticated metrics like CRPS, and perhaps most critically, for trust secured and verified through rigorous independent audits. Is that the foundation we need for the next generation of AI?
That's definitely something worth pondering as you watch how this incredibly dynamic space continues to unfold.
Keep learning, keep digging.